Eugene, when you look at all the kind of data and the earnings that are coming out, does it make you think, I want to ride this rally and I'd rather not bet against it?
Yes, I do. And I think that what Mike said about doing nothing was pretty interesting and absolutely correct. But when your clients and you see Zoom doing what it did last year, you see GameStop, you see Discovery, and you see all the stocks rotating back and forth, it's very hard to really imagine that essentially the pandemic rebound has shown a capacity to basically stay fully invested and rebalance your portfolios was probably the best strategy overall, and not get caught up so much in fear of missing out.
Charlie, is it harder to find names in your beloved value area of the market, considering that has been a leadership spot today and over the last few months? The Russell 2000, industrials, materials, groups like that on top.
Yeah, no doubt. It's a lot harder today than it was a year ago. A year ago, I was shooting fish in a barrel. But, we still have some very high quality financials trading at very reasonable prices. Goldman Sachs is trading at 10 times 22 earnings. That's 1.4 times tangible book. On a historic basis, that's below average. And Goldman is just getting better and better every year. It's like a good wine. So there are names that make a lot of sense. Obviously, I talked about how Madison Square Garden is still very, very cheap. There are names, in particular, if you believe me about inflation, there are names that are going to do very well in an inflationary environment. And I would just say, I love buy and hold, but you got to be careful when the S&P is dominated by FANG stocks. Just holding that index can be scary. You saw what happened in 2001. At these levels, I would not hold the S&P 500.
Shepard Smith here. Thanks for watching CNBC on YouTube.